Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris milling wheat and London, UK feed wheat.
Paris milling wheat. After the market created a cusp back in late May, we had a resultant break higher, something I cautioned about back then, and prices rose and fell through stratified layers of support and resistance. Some of them seemed then and still seem quite dense, such as the congestion area of overhead resistance that we sit just underneath right now between 238 to 242. And that's containing the March 2013 high at 240, the short medium moving average currently at 234, and the medium moving average currently 237. We also have the short medium moving average just below, currently at 234. Now prices pushed down through this 238 to 242 congestion in mid-November and dropped all the way down to the same low as we saw in May at 221 before reverting back up. As part of this move lower, I would like to again discuss some previously mentioned big picture items. Firstly, this market is still well within the big bear channel, currently 250 to well off the bottom of my daily chart. This bear channel is highlighted in dark blue on my daily chart and originates from October 2022, well over a year ago. Secondly, I've studied the more recent action in greater depth over the past few weeks, especially since early September. Now, I originally saw the opportunity for a possible sideways triangle, with the upper trend line highlighted in bright red, currently at 237, originally just above the medium moving average, currently 239, but now partnered with it, if a little below right now. In that time, this has changed its shape, though not its nature. It is still a triangle, but now a descending triangle, currently at 232 to 237. In mid-November, we had a breakout lower, and I laid out some targets below for such a pattern. That's the primary target in the 227 zone, whilst a harder to reach secondary target X1 is in the 220 zone, just under the May 2023 low. An even more recent study of the market revealed what I suppose can only be described as a head and shoulders pattern in the wrong place. However, much like a cat's ears pattern, which is a version of a double top in a descending pattern, this head and shoulders top is still showing there, but in a descending market, formed between June to November for neckline, currently 234, highlighted in purple on my daily chart, and currently entwined right now with the short medium moving average, which is also currently 234. Now, I have been frank in stating I am not necessarily comfortable with the head and shoulders pattern, but I still feel obliged to indicate potential for this pattern below. Thus, the primary target X2 is in the 215 zone, for secondary harder to reach target X3 down below the bottom of my daily chart in the 197 zone. I am not going to comment on these any further at this time, but I will add that yesterday's daily key reversal down and bearish engulfing pattern, if only just on the latter, have caused today to move into a fairly free support zone, down to the lows of 20 to 23 even, in the 221 zone. London UK feed wheat. The move higher from the May to July double bottom pattern reached its climax in mid to late July, with a combination of an island top that was also part of a small double pattern, Adam and Eve type. Since then, prices have moved lower and eventually gone sideways. The short medium moving average, currently at 185.85, has tried, not wholly successfully, to act as a sort of a cap on any rises, and the medium moving average, currently 187.40, has moved from being a market attractor to being a slightly distant cap in recent attempts higher. Interestingly, one of the key features here, and it is a surprising feature, has been the neckline highlighted in dark blue on my daily chart, currently 185.75 of the May to June reverse head and shoulders bottom, acting as a pretty reasonable support and on occasion resistance, though I suspect in the background the September 2021 low at 181.70 and perhaps more importantly the 50% absolute Fibonacci line, that's all the data in there, at 180.5 have helped in the past to prop up prices. This situation, I suspect, is not designed to last, as coming in from above, we have the declining long moving average, currently at 188 even. 188.70, dropping down to no doubt try and pressure prices lower. You can see the double top, though slowing its decline, it's not long now till the long moving average drops into the frame. So I would keep a close eye on it, as the room for maneuver of this market is becoming quite restricted. Now, in the bigger picture, there is currently no significant pattern development being undertaken apart from the previously mentioned neckline, which I suppose is a little disappointing and unsurprising at the same time. In the meantime, the market seems reasonably happy to travel sideways to every so slightly higher around, along and on top of the neckline, and towards the greater bearish pressure. Now that's coming in from above, so watch out for that.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.